All right, perfect. Recording started here. Let me just make sure audio and everything. All right, perfect. Looks good to me. So the data reviews we're going to be going over today. Um, so we ended off a TJ last time, it looks like, and then we have three more to go over. So the first one is 2024 11 pairs, and we'll just read it out real quick. So, hey, I would love to get some feedback to my trades, preferably in a live call, so I can watch it later again in key points. Trades were taken in 2024, deleted the other data review, added some pairs and more data, and now it's the correct one. So I have it pulled up already, actually. Take a look here. Now, you guys kind of know, if you want to type it in chat, my process, and one of the first things I look for when I look at a sheet like this, actually, there's the first few things I look for, but the very first one is typically just the win rate, and I want to get an understanding of, is this win rate including or disincluding break even? That's kind of the first thing I look for, and I like to just kind of say this out loud so you guys can get to a point where maybe even comfortable looking at your own kind of data. He mentions this is with break even. So for those of you that don't know too, if you get a sheet of data for whatever reason, maybe you guys are trading together, want to look over a buddy's data, you always go to the win section here and just check, if they have 0%, 1%, 3%, whatever it may be in the H column. Sometimes it's 1,000, 0. If I delete this, that gives me what's called my realized win rate, and 34%, fantastic level to be at. So the way that I typically say it is, if you are above 26%, you're profitable, and that's a great start. But your goal here, for those of you that fall in that category, if you're anywhere from 26 to 34, I think there is room for some improvement and optimization. If you're right on that line of 33, 34%, which we're here, I think that's a great place to be. And then I do think if you're nearing that 40% level in win rate, I would really recommend against trying to optimize from that point on, because I think that's when you kind of run into a scenario where you're going to end up cutting down your positions. So from what I see here, we have about 126 total trades, but if we obviously include the break even, about 178 in this 1 year on 11 pairs, which to me sounds pretty good. Definitely a bit more on the aggressive side overall, but I think that's a good thing regarding, obviously the returns we're seeing here, which is great as well. So these are some of the main things I kind of look for when first diving into an account. We obviously started with 100K, made 46%, which is fantastic. The win rate with break even is actually slightly lower than what I'm typically used to, but what that means when his break even win rate is lower, well, this is called your overall win rate, and when it doesn't include wins, or it doesn't include break evens, this is called your realized win rate. And the reason why a lot of people try to go off this metric a little bit more, it can be more important from a data analysis standpoint, like we're doing, but realistically, this is your most important metric, is when including break evens, because this tells you out of how many trades you enter, are you going to actually lose capital, which is very different, because obviously when you have a 34% win rate, when we utilize break even, it doesn't mean that 1/3 of our trades is going to lose capital when we enter the market. Only about 50%, like we just looked at, is how much you actually lose. So typically that metric is a little bit more important. Seeing your overall win rate here at 53% is pretty good. Slightly on the lower end, but the fact that realized win rate is 34% looks really good to me, which means that you're actually getting more wins than break evens, which is pretty significant as well. So we'll dive into a bit of the trades here. I also like to map an equity curve. So I am going to do that very quickly. So for those of you that don't know how, you always go to the dollar gain section here. This kind of tracks the value of the account. Go to insert, slap a line chart on here, and then drag it to the top here, and then we'll adjust the axes in a second. Always forget how there's a way you can just throw it right in a section, but I always forget how to do it. So we'll just take a look at this. We will adjust it to start at 100K for minimum. And there we go, which clear as day, super consistent equity curve here. Absolutely fantastic data. So in my personal opinion, I always say this when I see it set a day like data like this, take what I say with your trades with a grain of salt, because I personally think if you traded the exact way that you did in this backtesting session, you're going to see some great results on a live account or demo account. Um, so without even going into it just yet, my number one recommendation for you, if not already, start a demo account. Whether if you want to do an evaluation, I know that's a big kind of consensus a lot among a lot of you European traders here, or even just international. Um, Definitely start an evaluation or a demo account, because you already have reached that good level of win rate that we like to see. You have a good amount of trades here. The data looks great. The consistency is there. So I always recommend starting a demo or a evaluation so you can get used to that psychology side of things. Let's see what he says here, though. He said first 100 trades was a little conservative and took it break a structure, fair value gap, liquidity sweep, and trend. He said the rest I took aggressive and looked at break a structure and fair value gap, disregarded liquidity sweep and trend. So that's perfectly fair. I always kind of recommend you want to test similar as you go. But just looking at the equity curve here, I would not say there's enough analysis to make a conclusion between the two of those options you said, whether one is better or not. I will say typically the higher repetitions is fairly better from a longer term standpoint. You might lower your win rate slightly with those higher repetitions, but at the same time, you're going to increase the total output. And for a lot of you guys that are focused on evaluations, you're likely better off with a style of trading that's going to just get you more repetitions, because it will allow you to pass those evaluations quicker. Um, Compared to someone who, like, even like myself, I trade personal capital, I double my risk, but I am not the type of person who hops on once or twice a day, manages trades too aggressively. I mainly just take those larger, clearer ranges when they present themselves. Um, but yeah, this data looks fantastic regardless. We'll definitely take a look at some of the trades here. I'm gonna need to drag them to a new tab. Let's see what we got here. So nothing much standing out. I'm just gonna get a good view of a few of these before I even draw any conclusion. Can't stand these ads too that pop up now on the bottom of my screen. He said, I'm currently looking at the charts daily in the morning. How often do you check them? For me, about once a day. Some days I even miss. And when it comes to management, I have my EA, so I don't really manage too aggressively either. I am on my computer fairly often, anyways, for other work. But I am not really on the charts too aggressively. Break even here. Yeah, a lot of these trades look great though. Nothing that really stands out to me. And like I said, if you're collecting data like that, you're clearly on a great track here. So I don't expect to have too much input regarding the images. Do you currently trade demo or evaluation, or are you just focusing on backtesting at the moment? Live challenge and funded. There you go. You don't have the funded role though. You send me your certificate in chat, and I'll give you the funded role if you passed one, if that's what you meant. But this one's definitely a little bit odd for me. I personally would not really take this one because the range here isn't too clear, which it worked out in your favor in this case. But in most cases, I like to see that liquidity sweep and break a structure drawn at the same point. So wherever the liquidity sweep occurred for you, that would technically be where your stop loss should be resting. Um, and then typically same thing with the break of structure. So I like to mark the break of structure out in the highest point that broke structure is also where I like to have my stop loss resting. You kind of have a mix of the two here. But it worked out in this case, you could see, so not a bad setup. A lot of these look good. I was actually going to point that out. So this is the previous trade that you took, and I could see a very clear sweep and break here. I actually took the same trade on my live account. More solid setups here. Yeah, so it looks really good to me. Nothing too much input wise. I think the equity curve and the data looks good. I also want to say this as like a PSA to some of you guys that are listening. Please do not be the trader that only backtests. I have had, recently some students come to me, and whether they've been in the community for 6 months, they've been in the SMC space for 2 years, And they came to me and said they've never actually traded on a demo account. They've never used MT4 or any broker, and they've never done an evaluation. And I really, really want to make this clear. When we talk about backtesting, I would much rather, you would see so much more progress as a trader if you backtest alongside a demo. Even if you sit there and completely disassociate from the results of that demo account, go into it expecting to blow it, go into it expecting to hurt that demo. It's practice at the end of the day. That's why demo is there. But you would be far better off backtesting and demo evaluation, live, whatever you want to do on the side of it, compared to the trader who only backtests over and over and over to reach some certain goal in their head, um, because it does significantly hurt a lot of students. I've seen students who come to me after 6 months of testing and they've essentially burnt out their brain. They're in this data analytics stage where they're over analyzing all their trades, they're over analyzing the edge. Data becomes a jumbled mess of numbers, wins and losses, and it really, really is important to work on the demo account, work on an evaluation if you'd like, if you're fine with risking a little bit of the fee or whatever, alongside your backtesting. Backtesting is your practice, but you can backtest as much as you want. That jump into game day when you're in the live charts or an evaluation or demo is going to be just as hard no matter if you've backtested 2 years or 2 minutes. You mentioned currently having this problem, lost my confidence due to being confused if I should be aggressive or conservative since seeing the backtesting results. My honest answer for that, and this would be the same for everybody here, there is a big talk about aggressive versus conservative. At the end of the day, for a lot of you people on evaluations or attempting to get funded, I think aggressive is just flat out going to be your better approach. Even for me, like I find myself trying to push that aggression more, but I still maintain that passiveness on the charts, which I think is a big reason for it. So I kind of brush through my pairs. I don't really pay attention to the community and the trades that they're sending and sharing. I know that's a big piece for a lot of you as well. Where if someone in the community says, I have these 6 setups, you might go and look into those 6 setups and start placing them. So I definitely disconnected from that a little bit, which is why I have less trades in general. I kind of just go based on my own eye, my own confidence and comfortability. But for evaluation purposes, I definitely think a little bit more aggression and repetitions is going to be better for you, regardless of the possibility of a slightly lower win rate. You're going to have those higher returns in the long term with more aggressive trades. And at the end of the day, repetitions is what's going to get you to pass those challenges and kind of scale. However, I actually have not really seen this often, but if anybody comes to me with a set of data that's very, very conservative with low repetitions but great data, I think that can be an exception. But from what I'm looking at on this sheet of data here, you definitely traded a bit more aggressive. You have a good amount of trades per pair in a year. And I think doing exactly what you have done here, which seems to be a little bit more aggressive style trading, is going to be better for you in a live account. And that does kind of follow along with most of you as well. When I look over your data, I do see it's a lot more aggressive, and then you'll get onto a live account and maybe not have that confidence to be as aggressive, but it's important to do so and follow the kind of style of trading that collected you the great data that I'm seeing here. So 13 trade losing streak. So that is definitely rough, but what I will say about that is when you are new to demo, live, evaluation, whatever it is, there is that learning curve as well. This is why I said if you backtest 20,000 trades, you're still starting from scratch when you hop onto that demo account. As much as people might want to believe that their backtesting data is going to completely carry over, it's just not the case. So if you had a 13 trade losing streak, there's a few things I would do. One would be evaluate those 13 trades and kind of get an idea if, did they all follow the edge? Were they all the same style of trade that you placed in testing? The basics like that, because I will say with some deep reflection, deep self-reflection, a lot of people will find that when they're on a demo account, they're hyper aggressive maybe, or they're overcompensating for the aggression because now they're on a live account, want to make some money, maybe want to see some profitability or get those repetitions in. So I would definitely evaluate that. And the other end of the spectrum would be, are you missing winning positions due to any type of discretion or fear? So if this, sorry, but if this 13 trade, Ozzy said he's 13% also. So what I would say to that for the 13%, if it is within this month that you are down 13%, maybe take a look at some of the winning trades that others have taken and ask yourself what kind of sat you out of those different positions, because that's a very common one as well. Is losing streaks are not always just a bad edge in the equity curve. It technically means you could lose four in a row, and that winner's right supposed to happen there and clear out some of those losses. And instead of taking that, you end up missing the winner and just falling deeper and deeper into these periods of bad data. And missing winners does come from a lot of discretion, a lot of fear with losses, and it's very, very common that I see missed winners on live accounts more than I do in backtesting. Backtesting, when there's no fear associated with it, anybody will just take whatever trade they want essentially, and the data pans out great. But when you get onto that live account and start falling deeper, deeper into drawdown, that's when I find people start missing out on their winning trades. Can I send my current journal, journaling live trades? Yeah, we can take a look at that. But I think otherwise, I may not even go too deep into this data here. I think from what I'm seeing, this is fantastic data. I would personally replicate this as close as possible. I'm going to do the rest of the data reviews, and if I can circle back to a live journal, I will. But what I may ask to before I switch over, what period of time was that 13 trade losing streak as well? Said I missed 3 trades, I think, by close to entry, and the firm doesn't enter the trade. That's kind of a pain in the ass too. I can't speak much on brokers because they're going to be different for everybody. But for example, where was pound CAD for me? So like a trade like this was just something that for me was just a continuation play. I didn't really have a clear sweep here. I had the break of structure, had the fair value gap, kind of just followed, the structural ranges that I'm kind of seeing form here. So that was one trade I took, and then I think I had a pound AUD winner, kind of the same situation. We're just looking at these structural ranges, break of structures to the upside. These kinds of scenarios is what I mean, and this for me is only my 2 winners in April. I didn't have many. But the general idea is like looking back at some of the winning trades that may have occurred in a time frame of your losing streak and really ask yourself, why did I sit out of this? And if you do find yourself answering that question with a lot of discretionary terms, if you're like, oh, well, I didn't really like the liquidity sweep here, or I didn't, the fair value gap was too small. These are discretionary terms that if these come into your mind when you ask about trades that you missed, this is where I think discretion is hurting your ability to catch winning trades and leading you to miss more of them. And in my experience, missing winning trades is what leads to those deep, deep drawdown periods more than it is just a bad edge in the data right away. And it's especially difficult when you hop onto a demo account or a live evaluation for the first time to kind of catch that. So, honestly, just as final statement, exactly the style and the method that you traded here is what I think you should be doing on live. I see no issue with it. The trades look great to me. We could definitely take a look at the live journal in a minute here. But I do want to make sure we get to the data reviews first that people submit, because first come, first serve. But the equity curve looks great. This is what I would focus on. Maybe save some of these images somewhere if you want to get an idea of the style, the types of trades. And it allows you, when a trade comes up in a live account, you can maybe pull up some TPs here and say, oh, it looks just like this take profit that I took in my testing session. So it gives you that little bit more of confidence that you need on a live account to go and take the different positions you're seeing. But it looks great otherwise. I see no issues with that data. Let's see what we got next. Tested 2024, almost all major and minor pairs. Please review my trade and share some suggestions. Oh, he said an important. Access denied. This is my personal account. Let's sign in on this one and then request access. Hopefully, I think I saw him in the call, so hopefully he can go and submit that. But he did say, important note, I also include those trades that I missed, whether it was a winner or loser. Okay, I see. This part's a little bit tougher for me. If you are collecting data, it's tough because I want to see how it's logged, obviously, whether or not it's included. But if you're missing a lot of positions in backtesting, I do think you need to slow it down to take the time to make sure you're taking all positions, but also try to limit that discretionary tendency in your mind, because if you're missing a bunch of trades and then in hindsight you see if they win or lose and you go and log them in your journal, there is some hindsight analysis there, and that's not something you want to bring into backtesting, let alone the live markets, because you can't really do that in live markets. big losing streak too, SK mentioned. Yeah, they're definitely I have noticed, what do you say? 2 TPs and we'll be out. Yeah, that's really is all it takes. I mean, 2 take profits in a row, 3 take profits in a row, it's completely swipes out a bunch of drawdown like that. Hopefully, let me try one more time to request. If not, we'll take a skip forward on, let's see. You'll get an email letting you know if the request was approved. And Roshan, if you are in chat, feel free to shoot me a message and I should see it. If it is approved, just let me know. But we will skip ahead here to this session where he mentions I have 5 years of data, 2020 to 2024, 14 pairs. Anything should I improve? And it looks like we have a live trading journal and a performance Excel. So I'm going to pop open both. See what we got here. Okay. Enable. Let's close out previous testing sheet that we just had. Don't save. Scroll back up here. All right. We actually have 2 sheets here. I just want to get an idea. Am I looking at... Okay. Am I looking at the same set of data here? Trading journal. Okay, so this one is a live trading journal, I believe. And it looks like it's from about August to... August to oh, here we go, 2025. I'm just trying to get an idea here if I'm looking at backtesting or live trading journal entries. So April, okay, so this is a live trading journal here. We'll take a look at that after. We'll start here with the backtesting, which 43.5%. So I actually did kind of briefly go through this in DMs with him. He asked a question about it. So it looks like about a 56% win rate, so slightly higher than the previous data that we looked at, but the previous data was about a 34% win rate, and if we kind of go and adjust this, we can see how that pans out. So a little bit lower on the realized win rate side, but a little bit higher on the overall win rate. So what this essentially means is that we are in for a lot of break-even positions, definitely a bit more of an aggressive trading style as well. But overall, it looks pretty good to me with the total gain here, 43.5% gain. And I do want to once again map an equity curve just to get an idea of the consistency in a visual representation. Here, go to insert. Now, I know there's a way to insert it into a certain cell. If anybody knows, please let me know. I'm going to slide this over here. I always forget how to do it. I always do it this way. All right, that's fine. As long as I scroll up first, I guess it works out. And then it looks like he started at 200K, so we'll go and adjust the axis here. And there we go. So to me, absolutely fantastic regarding consistency. This data to me, once again, you know, it's getting, you guys are making my job easier and easier when I come to these data reviews, and it's already some great consistent long-term profitability and an equity curve. That the win rates are great, the profitability is great. So these are all awesome. I'll take a look at some of the trades here. It looks like 2020 to 2024, and he has about, call it 50 trades in 4 years, 25 a year. So definitely on that aggressive side. But yeah, the data looks fantastic here. So once again, I always say this, but you have data this good, trust it, trade the same way that you see in this backtesting sheet. I may find little pointers here and there that I could talk about, but otherwise, you know, I would do what you already have done here. Keep trading with a certain style, whatever preferences you prefer. Yeah, and these already do look pretty good to me too. Nothing really stands out. What is other? I'm interested to see what that. Not sure what other represents. Oops. Clicked on a Coinbase ad. Yeah, these all look great to me so far. I mean, there's really nothing that stands out here. And once again, like I said, with some data like this, you know, there's nothing that is really too important to go over. I feel like you've reached that certain level of optimization where you're in a good place to be. The only things I would probably recommend is, there's a little bit of room for this win rate to grow here. But it is something that with this aggressive trading style, it might be a little bit on the lower end in general. Um, See if there's any pointers I can give to kind of help that win rate. But to me, it looks really good overall. I don't see anything that stands out. Oops. I don't know why I keep doing that. I think maybe one concern I'm noticing would be regarding overextension of certain ranges. I do think some of these ranges here are very, very long and drawn out. And what I mean by that is like if you have a range that forms and then you hold that trade for a very long period of time. But honestly, yeah, I'm not seeing much of that. So I really do think this data set looks good overall. All of these trades I'm clicking on right here would be positions that I take. Yeah, these all look great. Keep going here, look at a little bit more. Yeah, these all honestly look great to me. There's really nothing that stands out to me too much that I would want to make any input on. This is kind of what I meant about the overextension of ranges. If you are at a point where you're kind of, I did see Roshan. Well, right after we get over this set of data here, we're gonna hop over to yours. And let me double check too, just to make sure. There we go. Yep, it let me in. All right, so we'll hop over and review that in a second. Yeah, the only thing I meant about the overextension was if you have these breaks of structure, I can't really see it in this scenario, but price continues running and running and running without you, forming new, smaller structural ranges or just overextending. I would avoid holding those for too long. A good example is like if I have a trade like this, I think it's perfectly valid. We have a sweep, we have a break, the fair value gap, all of the above. But if price continued running and running and running, and I had to continue overextending this range to kind of keep up with it, these are the types of ranges that I personally avoid. I would much rather see a new range with a good sweep, break a structure, fair value gap more recently form, and those are the ones that I would prefer to take. Just kind of keeping up with price action a little bit more. But other than that, the data looks great. There's really nothing that stands out to me too much. Um, all the setups have looked good that I've looked at so far. So once again, kind of similar to the previous data review we did, I would always recommend. And can I ask? I know let me check if he's still in call. He is, but are you currently doing any evaluation, demo, or any type of live trading on a broker? Funded and challenges. There you go. Yeah, so that's a big one. Is I do always recommend if you have data like this, it looks fantastic. Make sure you're getting that demo account or at least live market exposure, because it's kind of working both fronts. You're working on that psychology aspect while also having that practice in the back end with backtesting. Because at the end of the day, backtesting is literally just your repetitions. Like if you try to live trade and you want to avoid backtesting, I promise you're going to progress at 1/1000th of the speed that the traders who are actually backtesting and practicing are going to. And it's just simply based on repetitions. You're going to get better with all the trades you see, the data you're looking at, the repetitions you're taking. You're going to get more comfortable and confident with the plan. This is the way to do it. This is over 365 trades that he has here of repetitions, of practice, of confidence built because he sees the profitability and the win rate. This is what you need to be doing. And then at the same time, work on that demo account psychology. Letting the confidence in this data carry over to that live account is a whole other battle in itself. And yeah, we'll take a look at that live trading journal here. So I believe it was on Google Drive. Quickly look at that, and then we'll hop over to Roshan's data here. So see what we got here. 32% win rate. So actually a little bit higher than what you had in backtesting, but right around that same area. Equity curve looks pretty good here. Obviously, the repetitions are going to be lower, so it's a little bit less conclusive of data here. We cannot make too much. There's about 130 trades actually, though, so I'll give you that. But compared to the 360 that we saw in backtesting, win rate and stuff can vary. But I do want to see, is this inclusive? It is not. So this is your realized win rate of 32, which to me, number one, that's profitable. It's over that 26%, but 32 is still a great place to be. $12,000 gain, which is about 6% gain on the account, which looks great to me as well. I will say it's a little bit on the lower end regarding, the time frame that we're looking at here. So we're looking at about 4 full months of data. At 6%, it's about 1.5% return as well. So slightly on the lower end, but in my opinion, nothing really that concerning. Um, Risk per position. Now, this I want to talk about. So some of these stats are not filled in. So what is your risk to reward overall, and what is your risk percent per trade? To me, it's looking a little bit on the lower side here. So it looks like 1 to 3 are, but I'm saying in total, your risk to reward for the year. Um, is that in a column here? I know it says profit and RR. I don't really see it here though. It only tells me wins. Total trades, wins, losses. Well, I mean, 28 times 3 is what? 60 plus 24, so 84 minus 60, so 24R, it looks like. So I definitely think that is probably the outlier here, as it seems like your risk is a little bit lower. I would definitely recommend risking a little bit higher. Now, is this a live funded account? Is this an evaluation? Is this something that you're splitting across multiple evaluations, or how are you approaching it? Funded account only. Okay. So in my opinion, I think that's fine then. If you want to stay on the lower end to kind of make those payouts. Um, but I will say overall, you're looking at about 24 RR gain here, compared to only a 6% gain because you're risking significantly lower, about 0.25%, which I do think is a very low risk regarding uh, even funded capital or live capital. 0.25% is kind of hurting the overall gains that you can expect here. Just log trading here and take trades on challenges on unfunded. Yeah, so I definitely think you could probably increase that risk percent. It's up to you regarding comfort, but I will say with 24 RR in your first 4 months, it's about 6R or 6% if you're risking 1% gain. I think that's a fantastic place to be, but I do think risking 0.25% is what's significantly kind of hurting this number here, um, compared to the growth that you could be seeing or experiencing. Otherwise, though, the data looks great. How much should you risk? Like I said, it's definitely up to comfort. I'm not going to sit here and tell you to risk, a ridiculous percent that you're not comfortable with. But I will say, typically standard if you're in an evaluation, 1 to 2%. If you are funded and want to drop it a little bit, maybe 0.5, 0.75, I think that's fine. I do think 0.25 is just very low here regarding, the RR and the consistency that I'm seeing. When I see a trader that has fantastic backtesting results and a great win rate like you have, and then also being able to properly replicate that live, I think you're in a position where 0.25 is definitely low risk for you because you're seeing that consistency and you just need to work on that mental confidence. The data that we looked at here today is great on both ends of the spectrum, live and backtesting, which is kind of a rare niche scenario. You're at that point where you're profitably live trading, and once you reach a point like that, that's where I think your risk should definitely be. Try to move a little bit more away from that conservative side. 0.25 is fairly low. Yeah, but otherwise it looks great to me. I don't see much. Definitely some losing streaks in here, but you could see, for example, a deep losing streak like this, followed by just a few winners in a row. For those of you guys that were just talking about that 13 trade losing streak, you could see a deep, what is this, 3, 6, 8, 9 trade losing streak right here, and completely wiped out, plus 2 winners right after that. Which, it's just part of that edge in the data. You kind of see in a similar situation here. And obviously, from a visual representation, you could see these deeper periods of drawdown, huge profitable runs, deep drawdown again, another great profitable run. This is kind of what you can expect. And obviously, in that longer term, if you draw a line of best fit here, you could see that profitable edge. So this looks great to me. How many trades did I have in 4 months? Very aggressive 120. 129 in 4 months is a lot, but I think it's working fantastic for you. So I would have no problems with that. If this was negative data, your win rate was really hurting from it, I would say, you could try to be a little bit more discretionary or a little bit more mechanical regarding the rules. But to me, 129 trades, 24 risk to reward in 4 months, fantastic returns. So there's nothing I would change here. This looks great to me. All right. And yeah, no problem. So let's take a look at, we have another set of data here, if I can find it. Let me X out that. Backtesting, here we go. So this one here, right away, great win rate. Let's take a look at it. The realized win rate. Oh, it's view only, so I cannot see it, but it's fine. We can kind of work with what we got here. 59% gain, fantastic. 62% win rate. So what that kind of tells me is we probably have a good amount of winners here, and break even's a good ratio between the two. Sometimes what will happen is this number will be really high and the actual realized win rate will be very low. That typically happens if they have a lot less winners but a lot more break evens, and it's typically seen from more aggressive traders. But with the returns that I'm looking at here, it's clearly a good edge. However, you did mention the missed trades, and I will say it does skew the data here. So when you are backtesting, your fundamental goal of the backtesting is your own growth and experience. I understand from a confidence standpoint, you may want to see this fantastic profitable data and it builds that confidence. But if you cannot replicate that confidence because of consistent missed trades, it's going to hurt you more than help by almost putting a false hope into your mind. You need to essentially use backtesting to gauge where you stand as a trader. And if you were to not go in hindsight, not log any missed trades, how would this data have performed? That's your main goal. Because at the end of the day, if there's a bunch of missed trades on here and they all happen to be take profits, when you get onto a live account or you're trying to live trade in the future, you're going to find yourself hurting when you realize that the majority of these missed trades that end up being winners aren't going to be taken on a live account, especially if they weren't taken in backtesting. So what we have here, I want to read some of these. Liquidity sweep is not clear, but is continuation. Very high volume candle, valid setup. Mistrade, another TP, mistrade, another TP. So this data would definitely be significantly lower without the mistrade. So the number one thing we're going to do after, we're going to dive into some of these trades, obviously. But I would say focus on those mistrades and ask yourself why in more detail. And if any type of discretionary terms are coming up, this is a problem to kind of tackle. So we'll start here just looking at a few of these trades, get an idea of them. That's fantastic. On with that. Yeah, these look great. Any questions too in chat while I'm kind of going through this, feel free. I just like to get like a good view of maybe 10, 15 trades before kind of making any judgment. Look great so far though. So I do want to look at this mistrade here. So in my opinion, this is a situation. Is there a reason for the mistrade? Because to me, it looks great. I love this trade too before the sweep, the break, the tap in, and TP here. That looks great. I think this is the next most valid range. These are not really ranges that I would personally take. I would have the same trade that you have visually here. But is there, I don't know if you're still in chat or not, or currently here, but is there a reason that you did not take the trade? Because I think that's a big thing, is if you find yourself missing winning trades like this and logging them, you have to be able to justify, why did I sit out of this trade? And if it had to do with, oh, I wasn't sure about this structure, or I wasn't sure the fair value gap was filled, any type of discretionary analysis that kind of comes in the form of a reason for not taking winning trades is where I think data can hurt. Because when you get to that live account, if you're bringing that same type of discretion into it, the markets aren't going to forgive you, and they're not going to add data to your trading journal for these types of trades. Was not sure about the fair value gap, and that's fine. But this is what I mean by discretion, is when you look at it, my question that I ask myself is, was there a fair value gap? And it's a very simple yes or no. So the answer here is yes, so the trade's valid for me. And this is kind of what I mean by when you get onto that live account, you have to think in those mechanical kind of terms. Was there a fair value gap? Yes. Was there a break of structure? Yes. Was there a liquidity sweep? Yes. Follow trend? Yes. Good range here, whatever, 75? Yes. All the rules here are met. So in my opinion, these are trades that should be taken. And if they are missed, you want to really work on that mental avoidance. You want to make sure you're not avoiding trades like this because of any type of discretionary rule. Because was not sure about FVG is something that can't really be quantified, and it can't be, written in a mechanical nature. is, FVG was filled or not. That's something you can look at. But personally, for me, I don't care if the fair value gap is filled, so I'm fine with it. There's another fair value gap up here by the entry, right where we actually kind of filled into before taking that TP. And these are the kinds of things that if you can really attempt to limit that discretionary aspect of things, you're going to have much, much better performance on a live account because, the confidence when I get to a live account and I see, is there a fair value gap? Yes or no? I know fully and confidently that I can say, yes, there was, I'll take the trade, compared to someone who says, well, it's not large enough or it got filled. And that type of hesitation is what leads to missing winning trades. And as we talk about a lot, missing winning trades is 10 times, well, technically 3 times as important as taking losing trades. So you really, really need to focus on trying to limit that discretion, and you'll see that edge improve drastically in a live market. And this one here, I would ask the same thing. So this says miss due to fear of loss. And as you can see, it ends up being a winner. This is a very, very great example of this because number one, does it have, we follow the trend here, great break of structure, fair value gap, 75% you entered on. This is, in my opinion, what I would consider nearly picture perfect. In that simple fear of -1 now misses out on +3. So technically speaking, from a mathematical standpoint, you were afraid of just one -1 RR on the account, but because of that fear, have now missed out on 3 RR on the account and just mathematically hurting yourself based on the edge that you have. And this is why it's so, so important to really avoid that discretion when entering the live markets. You really want to look at a trading plan. We're not here to pick A+ setups. There's no such thing as, oh, this is an A+, this is a B+, A- setup. At the end of the day, you're looking for that repetition, the mechanical nature of the trading plan. Are the rules met? And the more that you can get to that mechanical method of trading, the more confidence and the easier it is to build confidence in a live market because there's no questions asked. Does it follow the rules? Yes, then I enter. Compared to, does it follow the rules? Yes, but I'm afraid this trade could lose. There's, maybe a little bit of equal highs here, maybe, or, the fair value gap isn't that clear compared to other ones I've seen. I don't like the break of structure. It's very quick. All these discretionary things will have you on your MT4 or MT5, whatever you use. You're not going to place the order, and then you end up missing out on that great profitable trade, and then you kind of beat yourself up after as well. So it's that kind of cycle that a lot of traders fall into. That's why we really, really try to focus on mechanical trading. It's one of the biggest things we talk about is that mechanical nature of things. I'm going to take a look at another missed trade here. This one's beautiful. So this is, in my opinion, a beautiful setup, and missing these ones once again definitely going to hurt that data overall. This is a break even though. I think it was logged as a TP unless I clicked the wrong one. Just double check. Yeah, so this one was logged as a TP in the journal. So that's another thing too, is I would really, let me also check that it was logged properly. It's odd. So, okay, now, so it was logged as that plus 3,000 there. I see. Yeah, so I would really make sure to log things correctly as well, because that'll definitely hurt and skew the data. I think my biggest thing that I'm noticing so far is number one, that the data could be, I hate to say wrong here because, you obviously spent a lot of time practicing this backtesting. Equity curve looks great, but if you're, number one, not logging trades correctly, it'll definitely hurt that data and hurt that expectation. You have to be as real as you can with yourself because I promise once you get to a live markets, the markets don't care for backtesting data. And the other part of it is just not logging these missed trades, working on why they were missed and working on fixing that out. Because at the end of the day, it may help from a confidence standpoint to have a sheet of data that has this great win rate and this great return. But if you yourself can't replicate that in even a backtesting scenario, it definitely won't be able to be replicated in a live market scenario. So you really got to be truthful with yourself. You really got to make sure you're logging data correctly and be as realistic as possible with these numbers up here, because that's what's going to carry over to that live account. Now, one more thing actually I want to look at are these. So I would recommend FX Replay for this reason. And I think that FX Replay is kind of what is going to give you that better gauge on your true actual trading performance, because FX Replay isn't going to care for missed trades. FX Replay will not care for that hindsight analysis and looking back on it and saying, oh, I should have taken this, add that to my journal for a little bit of boost in data. And FX replay is going to give you a lot better of that live market feeling, at least as price is moving, and really getting used to seeing those orders before they occur. Nothing in hindsight. And it's going to be as realistic as you can be. And also, it'll help you with a lot of the, if a mistake is made here where a TP was marked or a break even was marked as a TP, it's going to help with all of these things and give you a lot better of an accurate representation of your actual data and performance. So I definitely would recommend trying that out, and it'll help your backtesting a lot compared to just logging TradingView, maybe in hindsight or whatever it may be. There's another mistrade here. This one's a stop loss, it looks like, which looks great to me. Now, I don't know, did it say why I missed? Because I was suspicious about liquidity sweep and FVG. Once again, try to be as mechanical as you can. Is there a sweep here? I would say yes. You even marked it out. And then is there a fair value gap here? I would once again say yes, and you marked it out. This is the mechanical view that we need to be looking at the charts with, because I promise that little inkling of fear in the back of your mind is what's going to end up skewing your data in a live market. It's going to really hurt because in the live market scenario, the market does not care about your discretion. It's really going to beat you up. It's going to beat up those traders who can't really, you got to be confident going into that live market. Otherwise, they look pretty good. Liquidity sweep not present. I'm going to look at some of these ones with the notes next to it just to be. So in my opinion, these types of trades, if there's no liquidity sweep here, but you're seeing this very heavily bullish trending market in a great range, I'm perfectly fine with these setups. I know Sven and Andre would be all over this too. And realistically speaking, we kind of mentioned the liquidity sweep because at the end of the day, technically, yes, there's liquidity within these ranges that are being taken. It's by the term of internal liquidity. But for me, to make it simple, if I see a heavily bullish trending market and a great break of structure following that trend, highly impulsive, high volume move, and then a high volume move to the upside, like all of these different concepts are kind of what I focus on. I see the fair value gap, I see the great range, the break of structure, high volume bearish move at the low. So to me, this is a great trade. I would have no problem taking this loss on a live account. Take a look at some of these missed ones here. This one's definitely a little bit on the uglier side. And this would be something that I personally avoid. And the reason being is I don't think it's wrong to take this trade. But when I see the most recent area that swept liquidity and broke structure to the downside that followed our rules, I even see this little range in here. But for the most part, I see this high and this low. You would probably be more inclined to have your stop loss at this high and maybe take that loss compared to taking a winner like this. It's a very large range. I've even marked out ranges like this and taken these types of winners before, so I have nothing against it. But I think it's uglier because of the range that's going on here. But as long as you saw the sweep here, you saw the break and the fair value gap, and you marked it from that overall high that broke structure with the sweep, I think it's still a great trade regardless, and a very quick TP here. This trade, another kind of scenario like that where it's a bit of a larger range, a bit uglier, but at the end of the day, did it follow the rules? And I would say yes. Once again, you marked the sweep, you marked the break, you kind of had from your low to your high there, both fair value gaps drawn out here. So once again, another trade where I think sitting out of it is just hurting more than helping that data in the long term. And then we'll take a look down here. Just want to get an understanding of the equity curve looks fantastic here too. It's very clear and consistent, very minimal drawdown. But once again, I think it's tough to make a judgment on this set of data when we have seen some mistakes here and there regarding logging, because that's a big one. I can't necessarily catch that with my naked eye by just looking through and making sure all these TPs are TPs and making sure all the break evens are break evens and whatnot. So definitely, I would say FX replay is a huge step. I would recommend taking, obviously the account's free for you guys. I would use it, backtest as much as you can with it. And trust me, if you backtest on FX replay and find that the data is kind of sucking and that you're struggling, I would say 99 out of 100 times it's better for you than having something with a little bit of false hope involved here or expectations that are a little bit too high. 62% win rate is definitely on the higher end. 60% account gain, also on the fairly high end. I think it's much better to be realistic with where you stand as a trader than it is to try and create that false confidence, because the market will not take any exceptions for false confidence. It's going to hurt when you get onto that live account and see that expectation, or you have these expectations. So I would really recommend FX Replay. It's going to fix some of these issues with logging data incorrectly. And it's going to fix a lot of these issues, or at least give you that more realistic data when it comes to missed trades. It's going to really teach you, though, at the end of the day. Sometimes, you got to go through those hard stages and the hard reality to get to the other side and grow and become a better trader. And I think FX Replay will be a huge help with that compared to TradingView backtesting. But otherwise, I mean, it looks great to me here. I think the trades, the foundations of it look really good. And there's a lot of good TPs, a lot of good stop losses we looked at. So nothing that stands out to me too much. I just really think you would improve from FX Replay testing a little bit more in depth, not trying to log missed trades, focusing on yourself as a trader, not a hindsight trader. And then definitely just double checking certain little mistakes, like making sure all your break evens are marked as break even, all your TPs are proper TPs and everything like that, because that obviously will adjust and skew data longer term as well. But it looks good otherwise. I mean, nothing too concerning here. The trades look pretty good to me, for the most part that we looked at. So is there any questions that you have for me before we wrap it up here? Because we're just about, we got about a few minutes left. So any questions from anybody? And if not, we can kind of wrap it up. I'll get the video posted for you. You check my live trade? Yes, thank you for the reminder. Live trades, I know it's up here a little bit. Right here. Let's take a look. All right. So, it's the month of April. To me, looks like a good amount of trades. 35% win rate, but a negative 9% total gain is a bit confusing. Oh, so this is your realized win rate here. So definitely on that low end, taking a lot of break evens here. 14% win rate when you remove those. Now, what I will say is April's been a tough month, and the first thing I'll point out here is so many JPY setups next week. Yeah, I did see that. A lot of good JPY setups. But the thing I will mention here is, yes, a few people have had some rough months in April, definitely on that aggressive side too. But don't draw too many conclusions from your initial month of demo trading. There definitely needs to be some more repetitions in here before you draw too many conclusions. The tough part about this is when you hop into a live market in a rough month and you start seeing a lot of losers like this, it can hurt that mental aspect of things. Yeah, so I would agree. I would say keep on trading. Understand that when you go from backtesting to demo or live trading in a live market scenario, there is a big jump. There's a big mental shift that has to be made there. So you don't want to expect the best of the best data right away, and also understand that simply the probabilities at play. Um, Starting this journal on a rough month of the year is another possibility as well. I know myself, I had a pretty slow, rough month in April. I know some people were talking about deep losing streaks in April as well. So it's just likely a tougher month. And, I would keep trading it out, wait till you get some more repetitions. And at the end of the day, demo and live trading like this, your main goal is to just learn and gain that experience and improve as you go. There is a natural improvement and progression to live trading that isn't necessarily present in backtesting. If you think about it, backtesting, you're sitting down for one day, call it an hour. You're not improving too much. You're getting a lot of repetitions. But when you're demo trading and backtesting at the same time, you're really just growing and getting more experience as a trader as you go. You're going to naturally progress and get better as time goes on. You check some of the screenshots. Did you say they're similar to my backtesting? Yeah, we'll take a look at some of these. Oops. Here. Yeah, some of these look pretty good. I will say, BE because of spreads you mentioned. Definitely a bit of smaller, more aggressive ranges. It looks fairly similar to what you took in backtesting, but I want to get an idea of more. Definitely some small ranges in here. Let me delete this. I keep accidentally clicking on this. These look pretty good to me. Some of the breaker structures are fairly weaker, questionable here. Technically speaking, if this is your overall high, because it never came and broke this low, this is no longer a new range here. When you're looking at it from a structural standpoint, you would have to invalidate this low, and it never really quite got there. Looks like a fine setup to me. Also a good setup. also a good setup. So yeah, I mean, overall, not too bad. Like I said, there could be, and let me check the TPs. Okay, so this is the exact same TP that I took. Great trade there. And then we have another one here. AUD Chef, I did not take this one. Yep, very aggressive range here though, but once again, pretty good trade. So yeah, I mean, to me, there's nothing that stands out too much here. A lot of the, like, this looks fantastic to me. So I would not be too hard on yourself. It definitely looks like a dip in that edge simply because it's been a rough month. Some of these trades like this one, I will say, aren't the clearest. You want to look for those cleaner structural ranges. This is something where, yes, it broke structure here. Yes, we have a fair value gap, but there is just a lot of consolidation. It's not really a trading range. Other than that, I mean, a lot of these look fine to me. Kind of similar here. There isn't really any volume at the low. Like more of a better, yeah, like V-shaped, that's what you want to consider it. So for example, this is your previous trade. Let's grab a little drawing tool here if I can. So this was your previous winning trade that you took. I believe I just saw it in the previous picture. So you had a good break of structure. This is your high, your low, your high, your low. So I think personally, if you're going to take a setup here, it should be with this break of structure in your previous high and low. Stop loss at the low. Still a loss, but the idea here is that you're keeping that consistency and repetition based on the trade that you took previously, compared to kind of starting to get very aggressive and mark out these tiny little ranges as structure compared to, you know, this overall flow of structure that we're seeing here, you know, with these breaks of structure higher. So it's just like, you know, minute details like that. But like I said, these are things that in the longer term, if you're live trading, you're going to get better and improve with this stuff. So don't be too hard on yourself for a negative month of data. It's simply not enough or a long enough time frame to make any concrete conclusions. All right. Any other questions, guys, or I can wrap it up here. I think we're at about an hour for the video, so it might take a little bit to process, but I'll have it posted. Got a bunch of work to get done later too. 1 o'clock. All to hop on to at 1:30, I think. Yeah, no problem, guys. All right. If that's all, I'll see you guys next week. You know, enjoy your weekend too, and I'll have the video probably posted within the next 10 minutes or so. You'll obviously have to give it some time to process, but if you want to watch it back and kind of go through some of those pointers again, feel free. But I'll see you guys. Have a good one.